you were very helpful with this, so thank you for it. We're about to publish this. Hopefully you'll make my book party. Michael helped me write it. You helped me write it. Max helped me write it. There's a whole group of people that are in here. But you are genius level at predictions. Okay, so last time I had you on the show, Bitcoin, it was in the mid 50s to high 60s range. You said we're going to 100,000. I said, when are we getting to 100,000? You said by the end of the year. Okay, yeah. So why did you say that? What did you see? And what do you see for Bitcoin over the next 6 months?
Part of the reason we have stayed constructive on Bitcoin is the price is following closely the prior halving cycles. The halving cycle, for your viewers, is when the block reward gets cut in half. That happened earlier this year. So there's a reduction in new supply. And the sweet spot of that price gain as supply is cut starts to happen towards the end of this year and then into next year. And I think that has supported why we expected Bitcoin to be 100,000. And over the next 12 months, I think something over 250,000 is possible, but maybe highly probable based on just this following this price cycle. The second reason I think Bitcoin has maybe more upside than that is because the new administration has run on a pro-Bitcoin platform. And I think that the possibility of the U.S. not only legitimizing Bitcoin, but making it a strategic reserve asset, I think raises what would be the possible price scenarios for Bitcoin. Because if the U.S. government, as they intend, ultimately gets to 1 million Bitcoin, they'll be the largest holder of Bitcoin in the world. And they'd exert enormous positive influence on legitimizing Bitcoin. And maybe I would just add to that, it's almost like taking a playbook from MicroStrategy, because MicroStrategy has proven that using Bitcoin as a balance sheet asset has really created a lot of value for MicroStrategy shareholders.
In a world swirling with financial uncertainty, a bold proclamation has emerged that's turning heads throughout the stock market realm. Could Bitcoin, the digital currency behemoth, be more than just a fleeting trend? Tom Lee, Fundstrat's chief investment officer, believes so, and his insights are reshaping how the financial landscape views this digital asset. Is Bitcoin poised to reach new heights, or are skeptics right to imagine its downfall? Welcome back to Investocracy Crypto.
I'm a Bitcoin holder. I believe you're a Bitcoin holder. There are other coins out there. Some of those coins have not done it well at all. They've diverged from Bitcoin. And there's a few coins like Solana that have done quite well. I had an investment in something that I think you did some research on called Algorand. Unfortunately, has not done well. So away from Bitcoin, are there things that you like? Are there tokens that you think from a utility perspective, from a use case perspective, that you like away from the store of value Bitcoin?
Yeah, I mean, the answer is yes. We've recommended to our clients that if they didn't want to be Bitcoin only, that they could look at Bitcoin, Ethereum, and Solana, because we put those largely in the same category as like sort of core cryptos. Mm-hmm. Yep. We are also entering what I think is alt season. Next year is really when I think the crypto market could broaden. And this is where those who are really experts on crypto, and I know you run a crypto fund, actually are going to have some alpha, because that is actually when many altcoins could do really well. I think that the stronger Bitcoin is, the stronger the ecosystem becomes. And so many of these utility tokens and things that are tokenizing really start to have a lot of expected value. But I don't follow this as closely. Sean Farrell is much closer to sort of how to play alt season and, of course, Skybridge.
Well, I mean, listen, we own things like Avalanche, we own Polkadot, we own Solana. We don't have lots of altcoins, but our performance has been great. But I think this whole thing's been driven by Bitcoin. If Bitcoin goes down, Tom, I don't think these altcoins go up, right? They're very correlated. Wouldn't that be fair to say?
Yes, that's right. Yeah, so next year could be a good year for Bitcoin, but then the alts do even better. So what people would measure as Bitcoin dominance could fall next year. So Bitcoin's total share of the market cap would actually decline because other things do better.
That makes sense. Let me pin you because you're Mr. Prediction and you're Mr. Accurate. It's a year from now. We're celebrating Thanksgiving dinner, and both of us hopefully will have a lot to be thankful for, knock on wood. Where is Bitcoin 1 year from now?
Bitcoin 1 year from now, I think is something around 250,000.
250. Okay. So it's early then. If you could buy a stock at 10 and in a year it could trade to 25, that's a pretty good investment, right?
Yeah, very good. And, but knowing that it is hyper volatile,
Right. People don't like the volatility. I understand.
Yeah. Mark Newton, our technician, thinks that the cycle of Bitcoin turns a little bit down early next year. So maybe Bitcoin gets to the 60s, 60s before 250.
Tom Lee, a seasoned market observer, sarcastically notes that one would have to live under a rock to think Bitcoin, the surviving chain amid countless crypto endeavors, could vanish. He jokes about people not believing in Bitcoin and straight up ignoring it, thinking it is going to sink back to $0 in no time. He is predominantly aware of its staggering $2 trillion valuation, a number too colossal to simply dissipate.
The Dow tumbled nearly 700 points on Friday's strong jobs report boosted the case for the Fed to hit the pause on a January rate cut. Joining us now is Tom Lee, Fundstrat Capital CIO, head of research. He's a CNBC contributor. And I referenced you earlier because I do remember you sort of being positive overall about the market and for this year, but with some trepidation near term. And most of your calls recently have been less on the strength of the economy and more on inflation data. And some of your, like when you were calling things, S&P is going to end the week, 8% higher because of inflation or something. So we got inflation this week. There are concerns. I think I tie a lot of the weakness in the market to that. Are these important numbers?
It's important because, as you know, we've been correcting now for almost a month, right? 23 trading days. And this Wednesday is an important day because it is a possible turning point for markets. And I would like to see CPI come in below, 0.25 or so. And I think that would give that jolt of confidence for markets on top of, I think, earnings, which is going to be a positive catalyst. But for investors in the near term, I think they got to ride out the volatility because I think yields here have made people nervous. Not necessarily deteriorate the long-term outlook, but near term.
Are they smart, the yields, or are they not giving us a correct signal? Because you sound really like you're not sure about the inflation data this week.
I'll have a better sense over the next couple of days as we sort of finalize what our expectations are. But the only hesitation we have is that the hurricanes last year have muddled some of the inflation quality because, for instance, hotel reservations would go up because of these natural disasters, and it's going to happen now with the LA fires, and I think it's going to muddle used car prices as well because you have to replace all these used cars.
So you think if they weren't muddled, that inflation isn't that big of a concern? And when you say a turning point in the markets, if we've been down for a month, turning point doesn't mean further weakness. You think we might be making a bottom this week?
Yes, our technician Mark Newton thinks 5,700 might be the turning point. It could happen Wednesday, so maybe 2% down from here. But that's really where the market could make a stand. I think if we could lift the cloud of some of this muddling, in fact, Waller last week even said most of the inflation last year was about imputed prices, meaning the real price of inflation was actually much lower. I think that is still the case. Inflation is weaker when you look at housing, et cetera. So once we can get through that noise. But investors, I think, shouldn't be too glum. I think earnings season is going to be something that really solidifies. Look, if S&P earnings growth is 10%, X energy and revenue growth 5%, that's that's a really good reason to be owning equity.
Backed by a decade of growth and stability, Lee's bullish stance finds more ground in the macroeconomic climate. The tides of optimism are high, riding on a pro-business U.S. administration comfortably seated amidst $7 trillion of sideline cash, a veritable arsenal ready to be unleashed. As Lee describes it, the market is hosting a party, and the invitation list includes risk assets like stocks and crypto. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Right now, with their rate cut, I don't care whether they, that's not what I base what the market's going to do on. Are people still just dying for another couple of cuts, or I think we're lucky to have gotten what we've already gotten. We got to live with that and just try and hope inflation doesn't come back.
I agree with you. I think the best case this year would be the Fed doing one cut because the economy is strong enough and they're still dovish, meaning they're going to make their way to neutral. But if they push those rate cuts into 2026, 2027, that's a longer run rate to support markets. Part of, I think, the hesitation for stocks right now is we have a new administration starting.
What? Oh, that's right.
Yes. And, we essentially reversed that rally from November because we rallied 7% over 23 trading days. Mm-hmm. And now we've given up 5% and another 2% would just round trip us back to November.
23 trading days.
Do you think stocks look expensive here or not? I mean, we've come back down, as you mentioned, but people keep talking about the PE ratio and how it's historically at the high end of things. Do you think it's expensive, or do you think we have the earnings power to support all of that?
To me, the 10-year, even if it gets to 5%, is a 20 PE multiple on a 10-year bond. Mm-hmm. The median PE on the S&P is 17 times. So I think stocks are giving you much better value than a bond right now. And 5% is probably not the level that yields stay at. It's probably a deflection point.
Tom, what does the movement in Bitcoin say to you? So we're at 91,000. What is that? What is that a signal or a sign of anything in this sort of analysis?
Stupid Fed.
Yeah.
It's not cutting.
Yeah, Bitcoin's down roughly 15% from its highs, which for a hypervolatile asset is a pretty normal correction. And it is slightly following global liquidity, but we're pretty early in this halving cycle. So to me, I think Bitcoin in the near term, again, our technician thinks 70,000 is where we can sort of make a stand. Means you're getting a big opportunity because I think Bitcoin's going to be one of the best performing assets.
So hold on, but you still think it goes all the way down to 70,000, or you think that's the floor, in which case you would still buy at this price?
Yeah, so there's Fibonacci's. So one level would be 70.
Let's say that again.
There's retracement levels. So you pull back from where you rallied.
Right.
So 70 is one level. It could go to as low as the 50s. Uh-huh. But that's, again, not a new level. It's just where it touches before it begins to rally.
Okay, let me ask you a different question. For those folks who are watching who are not in Bitcoin or are thinking about buying Bitcoin at these prices, are you saying that this is a fair and good price to get in, or are you saying wait because you think it's going farther down?
Bitcoin is something you need to be long-term focused. I don't think anyone's going to lose money buying here at 90. If they're trying to time this, maybe they'll get lucky and it goes to 70. But to me, Bitcoin could be significantly higher this year, maybe 200, 250. So I think 90 is still a good entry point.
With the stage set and prospects glowing, investing in Bitcoin seems less of a gamble and more of a strategic move toward the future. The ongoing momentum, as Tom Lee elucidates, is backed by macroeconomic elements weaving a narrative of stability and growth. But what do you think of Tom Lee's words? Share your personal perspective on the matter. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.